Hey man, I've been trying to get this right for a while now. I'm wrapped up in a blanket because it's really cold and my heater doesn't work. Welcome to the winter months. Welcome to JM Trading. I'm your host, JM. Make sure to like, subscribe, hit the notification bell. I'm going to be doing this every Sunday. Thank you for joining the Sunday 12 p.m. stream. Where we review what's going to happen in the week, or what we think is going to happen. And it's really not about thinking, it's about working on our psychology from the previous week. So I'm no longer using Zoom because I'm like, I don't really like Zoom. I'm going to start using StreamYard, or I forget the other one. It starts with an Ecamm Live, but I would have to get the subscription first. But for the time being, I'm really just going to be on YouTube, and YouTube is the way to go. And I really want to talk about two trades that I took last week. This one, well, two trades that I kind of took last week. The first one is this one on, I believe it was a Wednesday or Thursday. We're gonna figure out which day it was, but it was December 7th. And I canceled my order right at the last second. And then the second one is going to be here, this one is going to be December 8th. And this one I actually got into, but then I trailed my stop really quickly, and then it ran all the way to my TP and then another 30 pips. So we're going to talk about the psychology behind that. It's going to be brief. I really don't want to spend too much time on this. And brief meaning 30 minutes. So if you have a short attention span, I'm sorry. So what I want to talk about is what exactly did I do on the 7th, right? So the 7th was, right, and we've got everything marked out, right? I've got my Monday to Tuesday, Wednesday, Thursday, Friday. I've got my news, my red and orange folders from Forex Factory. I have it all written down. And then I have the previous day, or the previous week lined out, and then I have my, my voids. It seems like a lot of lines, but I have my daily high, my daily low, my previous day high, previous day low, daily demand zone, right? And this was the trade right here. And then my Sunday's opening price and some other stuff, right? And then, double zeros to double zeros. These yellow lines right here are quarter levels. So let's go to the 7th, right? Apparently I took a trade here where this was the first one, right? Here it was. I have, let's see, 32.56, right? 32.56. And let's see. Okay, it says, okay, so I took this at 1400. On my broker's time, this is 1400 is 7 a.m., right? 7 a.m. is when I placed the order. At 8 a.m. I canceled it, and then it ran, right? And I'm doing a prop firm challenge right now, a prop firm account evaluation on my Forex funds. Shout out to my Forex funds. I'll leave a description I'll leave a link in the description below for their website. But 2 standard lots I was selling off, and I would have passed the whole challenge right then and there, really, with the amount of size I was using. And 59, so 56, so I had a 3 pip stop loss and a 100 pip TP, right? So like a 33-to-1 ratio. And I'm going to place that in context right now, right? So let me remove this from the screen. And let me make sure my stream is going good. I just started doing this on this channel, so nobody's really going to join, right? But that was the 7th, which was over here. Yep. And notice I still have the 1 minute order block already measured out there. So what happened here? How did I know this was going to happen? Right? Because there was a 1 minute order block here. So what I did here was at 7 o'clock I placed the order, and at 8 o'clock I canceled it. Right? So it looks like this. This was the input. I got in at 56 on a sell limit. I had a 3 pip stop and a 100 pip TP. This is what the trade looked like. All right, I'm even going to make this a bit more bright so you can see exactly what I'm doing here. Right? Now, what's funny is you got to trust your trade. I mean, you have to trust your trade, for God's sake. Right? The craziest thing happened here. Right? So I put my order out here. Let's remind ourselves again. I put the order out at 7:01 a.m. Eastern Standard, and at 8:01, an hour later exactly, I canceled it. Right? Almost to the second. 6 seconds off. Exactly 1 hour. And the reason is because I got scared, because I saw this 5 minute order block and I assumed that the price was going to do this. So I canceled my order because I'm like, you know what? I'm not going to take this order and take that 3 pip loss, because that's going to be on 2 standard lots. That's going to be $60, right? That would be 60 bucks. I'm like, I don't want to lose 60 bucks, but I'm like, why would you place something if you're not going to be okay with the risk? You have to be okay with the risk. You know what I'm saying? So straight up, straight the hell up, right? And this was a Sunday, Monday, Tuesday. This was a Tuesday setup. And look at the order block down here on the 5 minute chart. Right? At 9:30, which tends to be our reversal for a New York session. That was the so what I thought happened here, what happened here, I thought was going to happen here. Trust your trade though. Because what happened? As soon as this came up like this, I canceled the order. But guess what happened? This came up, if you notice at the top, this came up 4 pipettes away from getting stopped out. Okay? 4 pipettes away. And even if I did get stopped out, I probably would have got back in. Knowing what I know now. Knowing that, hey, this was a great, great trade. And if I could somehow load up the 1 minute chart, that would be great. Check this out on the 1 minute chart. I mean, you got to trust your trade, guys. Like, for God's sake. Look at this. Okay? Look at that. Reading those Japanese candlesticks. Bearish pin bar. Right? Then you got a 1 minute order block that mitigates to the damn body and drops down, never comes back. Right? Until 9:30, which is around right here. We get a mitigation back into a 1 minute bull OB, bullish order block, runs up the other way. Right? So how did I know this was going to happen? Because look at this right here. Right? And I'm so sorry. I know my face was covering the price action. I got to be aware of that. But right, let me see within frame where it's high, low. Okay. So I'll keep it right here within frame. So notice over here, I have a 1 minute bearish order block posted. Right? Where's that 1 minute bearish order block? It's right here. It's right here. Look at this. I can't make this up. It was to the body. Right? This was the body right here. This was half the body. Right? That was bad. But I basically aimed for half the body. which is why I was getting in at 56, 57, because that was about where the order block was at. Does that make sense? So it runs up, and it would have kind of stopped me out. Probably not. It would have came a few pipettes away from stopping me out, and I would have been in deep profit, right? Now remember, excuse me, I set an order to go all the way to 91, right? That would have been, oh yeah. So I thought it hit my zone. So no, that was the other trade. This one I set to 90 pips. I don't know why I said 100. I meant 90. I'm sorry about that. So it was a 30-to-1 ratio. I'm sorry about that. And the reason is because I have this daily demand zone sitting right there, right? Which I'll look at in a second. But in any case, it didn't go to that daily demand zone. It went all the way to 930, which I know is a reversal, and created a 1-minute order block. By that point, I'm going to be trailing my stop loss. Okay? Knowing that the reversal's there, I'll be trailing and taking at least this much off the table. Right? I'll know that if it takes off at that point, right, that I'm looking at a structure break, because this is now at a reversal point. I know this is a reversal point. It's 930, and it's a 1-minute order block, so I know I'm gonna have to take some profit. So I'm taking 13R off the table. If I'm risking 1%, I just made 13%. If I'm risking 0.5%, I just made 6.5. Okay, and this is 39 pips. Right, so on that 2 standard lot position, I would have made $780. So I would have passed the prop firm evaluation, right? I only need 8%, which is $800 on a $10,000 account, to move on to the establishment phase, which is 5%, or $500 on a $10,000 account. Right, so that was the first trade. That was beautiful. But I canceled it right here at 801, right on this candle, because to me this looked bullish. I thought this was going to keep going up, but then I noticed a few minutes later that it was dropping, and then it just kept dropping, and then it just got bad. And I'm like, wow, this is going to be a great case study for my subscribers and for my viewers to note, like, dude, just trust your damn trade. Just trust it. If you put an order out and you know you're going to risk a certain amount, let it ride. Because you know you're only risking 0.5% or 1% of your account. You're still protecting your capital. And I'm not looking to make money. I'm looking to not lose it. Of course, we're looking to make money, of course. But I'm trying to not lose my capital. I'm trying to protect my capital. So, I mean, I was already risking a small amount of a $10,000 account. I was risking, I don't know what's wrong with my nose. Just allergies. I was risking $60 to make, so I was risking $60 to make $1,800. Like, and I would have taken profit at around $800. So, I don't know. I was just not in a good headspace there, right? Case study number 2, and this will be the last case study, right? Technically, this is backtesting, but I don't want to call this backtesting. This is technically psychology, right? So, case study number 2 is this one, this bad boy right here, right? This was the next day. Right? So I learned from the day before. I'm like, okay, I got to hold on to these trades. I got to trust this trade. And I ended up doing that. I'm like, okay, I'm going to trust this trade. But I trailed my stop too quickly. Psychology. When you see yourself in profit and you're starting to take partials too quickly, or you're hesitating, or you're trying to just lock in profits, you're actually screwing yourself over. Because here's what happened, right? At 442 is when I got in. At 455 is when I got stopped out. So let's go look at that. Right? And what's the parameters? 40 and then 91. So I probably 40 plus 9. Oh no. That's a 50 pip. So I probably have, oh yeah, I remember my stop loss was 46. Right? So let's go to the 8th right here. And here it is. I don't know why there's a double box here. Sorry about that. Right? So, boom. Here we go. We have right at 4, what was it? 42 and then 455. So we go over here. And here it is. 452 or 442, I should say. Right? I probably should have done this ahead of time. I know. Whoops. 442. 442. 455. Right? My entry was 32.41. My stop was 5 pips away. And then my TP was 50 pips away. So this was a 10-to-1 ratio. Right? Look at the mistake that I made here. Right? So I sold right here because I believe that this was a 4-hour order block, if I'm not mistaken. Right? If I'm not mistaken, this was a 4-hour order block. Right? Right at 41, excuse me. This was a 4-hour bearish order block. I'm going to show you what I mean by that right here. Right? This was a 4-hour order block. You can see right here what I'm talking about. This was the 8th, right? So this got to a high of 45. The body of this was 44. So the order block was at 44 actually. Right? The order block was actually at 44. Right? And oh wow. This is messy. So the order block was actually at 44. It wasn't at 41 like I'm saying it is. So when we go all the way back, you can see exactly what I'm talking about. Where I'm getting these very precise entries just based off of these little order blocks. Right? And this was a 4-hour at 44. Right? So, but what happened was I got in kind of late. And the reason I got in kind of late was because I quite literally, I mean, that was 3 pips off. I wasn't that late, right? But I got in right here. And the price started to curl back. So I was already kind of nervous. But this was a 1-minute order block that gets mitigated. We run up, we grab the order block, run into profit. And then right when it gets right here, I trailed my stop loss like an idiot, 1 pip into profit. And then it came in, banged me out of the trade with an M formation at the top of the bearish order block at the end of the London 3-hour window from 2 a.m. to 5 a.m. Gave a beautiful bearish pin bar at the top of the 5 o'clock hour, and then proceeded to dump in the direction that I thought it was going to go into in the first place. It went in, it proceeded to go in the direction I knew it was going to go in the first place. Right? And not only that, it smashed my TP. Look at this, guys. Here was my TP. And it smashed it. Right? It smashed my TP. Right? So what are some lessons to be learned here? To wrap this up. Well, you cannot just sit there and once you're in profit, trail your stop. You have to wait until this thing gives you some you know, some pushback. If I'm targeting 50 pips and I'm only 5 pips in profit, why would I be trailing my stop loss? I should wait until I'm 10 pips into profit, and not even that. I should wait until I'm a third, which I have a rule for, in profit before I even go break even or 1 pip into profit. So what's a third of 50? Well, what's a third of 51? 51 divided by 3 is 17. So I could have waited until the price got to about right here. Right here. And then trailed my stop to right here. 2 pips into profit. Because look, it never comes back. It never comes back to hit my stop loss. It comes back to just right here and then keeps dumping. And then consolidates, comes up, and then boom, drops. You know how that works. Sellers pull back. You know how the market works, right? So the lesson to be learned here is be patient. It really shouldn't even be called trading. It should be called waiting. You need to be patient, you know? There's no reason for you to be trailing your stop that quickly or taking profits or taking partials when your trade hasn't even moved even 15 pips yet in the right direction if you're aiming for 50. And the reason I was aiming for 50 in the first place, even in this scenario, was I just knew it was going to go down there. Why did I know it was going to go down there? Well, because I could have been taking this little image off. But the reason I knew it was going to go down there, technically speaking, is because I had a bias already. Right? I already knew that this was a demand zone. Right? And you can see right here. I mean, not only did it hit 91, it hit 61. Right? And the daily demand zone on the daily chart, you can see what I was talking about here. The reason I was aiming for that is because I'm not aiming for, I'm like, okay, if price drops through here, where's the next place it's going to go? Well, it could go to 88, which is right here. Or, what's the next line it could go to? 65, which is right here. Right? So my first TP was right here. My ultimate TP was targeting this wick, which was 88. My second TP was this. My next initial level to drop would have been this, which was 65. Because that was the next wick. And then the next wick would have been this at 35. And then the void, the daily void right here at 22. 20, you know, 32.20. Or 31.20. Right? So that was my reasoning behind all that, if you're wondering. Right? So that's why I chose 31, you know, that particular day. That's why I chose 31.90, right, as my TP, because I felt as though, okay, my first demand zone is right here. It's going to be like 88 or so. So I targeted that very zone, and it came right there, you know, boom. And you can see right here, look at this. You can't even make this up. Look at this right here. Look at the wick. It came down during the London-New York gap time, right? The gap time between London and New York, typically speaking. I know there's an overlap, but I like to focus on these sessions. 2 a.m. to 5 a.m. Eastern is London. 8 a.m., 11 a.m. Eastern is New York. Typically speaking, that's the main bulk of it. I know they overlap, but that's just me keeping it simple, right? And you can't even make this up. Look at this. Right at 88, We come down, mitigate the order block, right? We come down, mitigate the order block, or we come down to the daily demand zone, right? And then we pop up, whatever, and then we bang against the double zeros, and then we run down to the next level of the daily demand zone, which was 31.65. Like, you can't make this stuff up. This stuff happens all the time, right? You just have to be prepared for it, right? Oh, these allergies suck, right? So be patient. Trust your trade. Trust your trade. Going into this week, jeez, I am so sorry. Going into this next week, I want you to trust your trade. I want you to, when you, and this is for me too, of course. This is not just, I'm really just saying this for me, but for anyone else out there who will take this, like, wow. When you see that you have a good bias and you have a good understanding of where price is going to go based on a consolidation, and you know there's a 4-hour order block, and the 4-hour candles are 9 p.m., 1 a.m., 5 a.m., and it's 5 a.m., and we're hitting an order block, and we hit another order block right here, right? We're hitting a 4-hour order block, a 1-hour order block, a 4-hour order block, a 1-minute order block, and a 5-minute order block. I just saw this right now. There was so many confirmations, guys. If you're seeing and it's banging against the Sunday opening price, right? Because this is the Sunday opening price for that week. If you got to understand that if you have a bias and all the confirmations are there, and everything lines up, and you're risking only half or 1% of your account, or 2% of your account if you're feeling froggy, baby, or 5%, you need to let your trade breathe. Let it run 1/3 of your estimated distance. If you are targeting 60 pips, let it run 20 before you break even, or do a 1R. Go 1-to-1. If you're targeting 90 pips, let it go 30 before you go 1R. If you're targeting 30 pips, let it go 10 before you go 1R. I would rather get stopped out and not move my stop loss, and not move my stop loss so I can eventually probably get this move, right? I would rather do that than to trail my stop loss 1 pip into profit immediately and get stopped out 1 pip in profit and miss 50 pips of profit. Do you understand what I'm saying psychologically? You know what I'm saying? So take that into account. I would rather wait and possibly get stopped out at my original stop loss so I could catch 50 pips or 60 pips or 90 pips. I would rather do that than to trail a pip into profit, 3 pips into profit, just to lock in some gains, but then I end up missing this entire move. I end up missing 60, 90 pips. So there's a psychology here that you have to understand. One good piece of perspective I would give is don't look at your P&L. Just focus on the process. Excuse me. Focus on your entries, focus on your TP, and focus on where your stop loss is at. Put it at the top of a previous high or low, depending on your bias, if you're long or short. Put your TP, your take profit, where you believe there's liquidity or a demand zone or a supply zone, again, depending on whether you are long or short. And then enter based on an order block on a high time frame, like a 4-hour or a daily or a 1-hour. And then use your added confirmations on the 5-minute, the 15-minute, the 30-minute, the 1-minute to see even more order blocks to get an even more refined entry so you could get an even crazier trade and ultimately be consistently profitable. Guys, thank you so much for joining this episode. Thank you so much. I know the attention spans nowadays aren't that big, but I'm doing it. I'm doing it big. You know, I still have not the best setup, you know, and everything's gonna come to fruition. But I'm still able to stream, and I'm blessed to have a computer that works, that I can stream on. And thank you for joining. And that's really it. I really want you guys to understand that there's a psychology to this. You don't have to make this that complicated. And going into this next week, the market is going to open in five. Actually, let me put this right back. The market is going to open in about 5 hours. Okay. So going into this next week, we gotta, you know, we gotta have this. Keep this in mind. If you have a trade idea, you have a bias, stick to it. Don't second guess yourself. Just react to the market. Okay. Now we can delete these zones, and I'm gonna move Sunday's opening price to over here, right? Jeez. Sunday's opening price is going to be 32,642. Right? And then I also have this. I have a second version of GU where I literally have the previous month's range, which was 500 pips, right? I have the monthly range so far, which is 190 pips. I have the previous week's range, which is 128 pips. And then the weekly range is undefined because we're not there yet. And these red dots, these red dotted lines are every single 12 a.m. This is 12 a.m. Eastern Standard Time. These blue lines are every week, every Sunday, 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 Sunday. And these red lines right here are every month. Every month. You feel me? And so that's how I trade. You know, I break everything up into ranges. Monthly range, previous week range, previous month range, previous month range, previous week range. And I keep it simple, and I break it apart based on the days of the week. So you can see up here, Sunday through Friday, and then Sunday through Friday again. And then I'm going to have to copy that over for this week. And then I box off London range, Asian, London, and New York. Asian is, for me, the crucial part of it is 5 p.m. to 12 a.m. Eastern. And then there's Sydney Tokyo session, which I call Sidtoy, which is 8 a.m. to, 8 p.m. to 11 p.m. Eastern. That would be a yellow box. But Asian range is orange. That's 5 p.m. to 12 a.m. Eastern. London is green, which is 2 a.m. to 5 a.m. Eastern. And then New York session, is blue, which is 8 a.m. to 11 a.m. Eastern Standard Time. Guys, trust your trade. Trust your trade. And going into this next week, keep that concept in mind. Be good to yourself. Be kind to yourself. I'm gonna leave you off with a little bit of music, and hopefully that's playing. I don't know if it is playing, but thank you so much. Give me a second. Yes, thank you so much. Keep this in mind going forward. Peace out.